In the second quarter of its 2026 fiscal year, a three-month period ending in July 2025, a single division of one company generated $41.1 billion in revenue. This wasn't the total revenue of a global conglomerate, but just the data center sales of Nvidia. To put that number in perspective, it is larger than the annual economic output of nations like Laos or Iceland. It is a figure so vast that it blurs the line between a corporation and a global economic power. This is the scale of the empire that Nvidia has built. In an industry defined by constant disruption and fierce competition, one company has constructed a fortress so formidable, so dominant, that it seems to operate on a national scale. Its products are not merely components, they are the foundational infrastructure for the most significant technological revolution of the 21st century: artificial intelligence. The central question is no longer if AI will reshape the world, but who will control the tools that build it. For nearly a decade, the answer has been unequivocally Nvidia. But empires, no matter how powerful, always invite challenges. The question now is, in a market that has become a kingdom of one, how was this fortress built, and is there anyone at all, who can breach its walls? To call Nvidia's position in the AI hardware market dominant is an understatement. The company commands an estimated 80% to 95% of the market for AI accelerators, a figure that borders on a functional monopoly. This isn't just a comfortable lead, it is a chokehold on the entire industry. This control is visible across the board. In the second quarter of 2025, Nvidia captured a staggering 94% of the discrete GPU market, leaving its primary rival, AMD, with a mere 6%. This level of market capture allows Nvidia to dictate terms and, most importantly, prices. Its flagship AI accelerators, like the H100 GPU, command prices ranging from $25,000 to $40,000 per unit, a premium that customers have been forced to pay due to a lack of viable alternatives. The world's largest and most technologically advanced companies, Microsoft, Google, Amazon, Meta, have spent tens of billions of dollars building out their AI data centers, and nearly every one of those dollars has flowed to Nvidia. This has created a cycle of dependency. The more the world invests in AI, the more powerful Nvidia becomes. But it has also created a deep and growing anxiety within the boardrooms of its biggest customers. A total reliance on a single supplier is a strategic vulnerability of the highest order, and it has set the stage for a desperate search for a plan B. The true source of Nvidia's power, its most formidable defense, is not forged from silicon. It is written in code. For nearly 2 decades, Nvidia has been building a competitive advantage so powerful that it has become known in the industry as the CUDA Moat. CUDA, which stands for Compute Unified Device Architecture, is a proprietary software platform launched by Nvidia back in 2006. To understand its strategic importance, it's helpful to think of it as the iOS of the AI world. Just as Apple built an ecosystem where developers create apps specifically for the iPhone, Nvidia built an ecosystem where AI researchers and developers build models specifically for its GPUs. This ecosystem is incredibly deep. It includes specialized software libraries like CUDA for deep learning and a vast toolkit that allows developers to extract the maximum performance from Nvidia's hardware. Over the last 18 years, millions of developer hours and trillions of dollars in research and development have been poured into building applications on top of CUDA. Every major AI framework, from Google's TensorFlow to Meta's PyTorch, is optimized to run best on CUDA. This creates a powerful form of vendor lock-in. For a company like OpenAI or Google to switch to a competitor's hardware, it's not as simple as swapping out a graphics card. It would require rewriting and re-optimizing years of foundational code, a costly, time-consuming, and incredibly risky proposition. This software moat has, until now, seemed insurmountable. It has ensured that even when competitors produce powerful hardware, they remain on the outside, looking in at a fortress of code they cannot easily penetrate. The current standard-bearer for Nvidia's dominance is its Blackwell architecture, embodied by the B200 GPU. This chip is the Goliath of the story, the technological benchmark against which all challengers are measured. The Blackwell B200 is a marvel of engineering, packing 192 gigabytes of high-speed HBM3E memory and delivering a massive 8 terabytes per second of memory bandwidth. Its performance is so critical to the AI build-out that the world's largest cloud providers, the hyperscalers, are reportedly deploying them at a breathtaking pace, with each installing as many as 72,000 Blackwell GPUs per week. This is the champion AMD must face. The scale of Blackwell's deployment and its raw performance sets an incredibly high bar. To compete, a challenger cannot simply be a little bit better or a little bit cheaper. It must offer a fundamentally compelling reason for the world's largest tech companies to undertake the risk and expense of supporting a second ecosystem. Nvidia's empire is not just built on market share, it's a systemic dependency that has reshaped the global technology landscape. The company relies almost exclusively on a single manufacturer, Taiwan Semiconductor Manufacturing Company, TSMC, to produce its most advanced chips. Because the entire AI industry, from startups to nation-states, relies on Nvidia's GPUs, the world's technological progress is effectively bottlenecked by the production capacity of one factory in Taiwan for one primary customer. This creates a single point of failure of immense geopolitical significance. A trade disruption, a natural disaster, or a manufacturing issue at TSMC wouldn't just delay a product launch, it could stall the most important technological transformation of our time. This reality elevates the search for a credible second source from a simple business preference to a global strategic imperative. If there is one company with a history of challenging a seemingly unbeatable incumbent, it is Advanced Micro Devices, or AMD. Under the leadership of its CEO, Dr. Lisa Su, AMD has cultivated a reputation as a resilient and innovative underdog. For decades, AMD waged a relentless battle against Intel in the market for central processing units, CPUs. It was a classic David versus Goliath fight, where AMD consistently positioned itself as the scrappy, cost-effective, and often more innovative alternative. For years, it was a brutal fight for survival. The company's fortunes changed dramatically with the launch of its Zen microarchitecture. The resulting Ryzen processors for consumers and EPYC processors for data centers were a triumph of engineering and long-term strategy. They offered competitive, and in many cases superior, performance at a lower price, breaking Intel's long-held monopoly and dramatically shifting the balance of power in the CPU market. This history is critical. It serves as AMD's resume for its most important job interview yet. The hyperscalers, the very customers AMD needs to win over, have already seen this playbook. They watched AMD execute a multi-year turnaround to bring competition back to the server CPU market, a move from which they directly benefited through lower prices and more innovation. Now, AMD is promising to do it again, this time in a market an order of magnitude more valuable. To challenge an empire, one needs a powerful weapon. For AMD, that weapon is the upcoming Instinct MI400, an AI accelerator designed with a singular focus: to attack the fundamental bottlenecks of large-scale AI. The MI400's killer feature, its sharpest point, is memory. In the world of AI, large language models are like massive encyclopedias. The GPU's compute cores are the readers, tasked with processing the information within. High-bandwidth memory, or HBM, serves two functions. Its capacity is the size of the table you can lay the encyclopedia on, and its bandwidth is how fast you can turn the pages. If the table is too small, you have to constantly swap volumes in and out, a process that dramatically slows down the readers. This is where AMD is placing its bet. The MI400 is projected to feature an unprecedented 432 GB of next-generation HBM4 memory, delivering a staggering 19.6 terabytes per second of memory bandwidth. By comparison, Nvidia's current generation Blackwell B200 has a 192 GB table. For the largest AI models, which are growing to trillions of parameters, this difference is monumental. It means a single MI400 can hold an entire massive model in its memory at once, eliminating the data shuffling bottleneck that can plague systems with less memory. It is a direct assault on what is known as the memory wall in AI computing. This memory advantage is paired with formidable raw power. The MI400 is expected to deliver 40 petaflops of performance in the FP4 data format, a low-precision format critical for fast AI inference, which is double the performance of its already powerful MI350 predecessor. Underpinning this hardware is a key manufacturing advantage. AMD has long pioneered a chiplet design strategy, constructing its processors from multiple smaller, specialized dies instead of one large monolithic chip. This approach allows AMD to utilize the most advanced manufacturing processes from foundries like TSMC more quickly and with better yields, potentially giving it a crucial edge in both cost and time to market over Nvidia's monolithic designs. The battleground for the next generation of AI is being defined now. The following table illustrates the starkly different design philosophies of AMD and Nvidia as they prepare for the 2026 showdown. AMD's strategy is not simply to build a faster chip, it is a calculated gamble to build a different kind of chip. As AI models continue their exponential growth in size, the physical constraints of memory capacity and bandwidth become the primary limiting factor on performance. Nvidia's roadmap shows powerful but incremental improvements in memory. AMD, in contrast, is planning a generational leap. This is a bet that the future of AI will be so profoundly memory-constrained that a hardware architecture with a massive memory advantage will become indispensable. It is a bold wager that in this specific technological moment, superior hardware design can create a large enough crack in Nvidia's software moat for a challenger to finally break through. AMD's market strategy is as pragmatic as its hardware is ambitious. The company knows it cannot kill Nvidia overnight. Instead, its core pitch to the handful of customers that matter is one of strategic necessity. AMD is the indispensable second source, the credible Plan B that can protect them from the immense risks of a single supplier monopoly. For hyperscalers like Microsoft, Amazon, and Google, relying entirely on Nvidia for the most critical component of their future growth is a terrifying prospect. It's not just about the risk of price gouging. It's about supply chain resilience in a volatile world, the ability to influence a supplier's product roadmap, and the fundamental business imperative of avoiding being at the mercy of one company's decisions, priorities, and production capacity. AMD's argument is simple and compelling. It offers hardware that is not just competitive, but in key areas like memory, potentially superior. It does so at a lower total cost of ownership, a crucial factor for companies deploying hundreds of thousands of GPUs. Reports suggest AMD's MI350 accelerator is priced around 30% below Nvidia's comparable B200, and internal benchmarks claim a significant advantage in tokens per dollar, the ultimate measure of AI efficiency. The pitch is clear. We give you performance, we save you money, and most importantly, we give you leverage. The second front in AMD's war is software. The company's answer to the proprietary CUDA moat is ROCm, the Radeon Open Compute platform. Crucially, ROCm is open source, and this is not just a technical detail, it is a core strategic differentiator. For a hyperscale customer, open source means control. Unlike the black box of CUDA, they can inspect ROCm's code, customize it for their specific needs, and contribute their own improvements back to the community. It transforms them from passive customers into active partners, giving them a degree of ownership and influence they could never have with Nvidia's closed ecosystem. For years, ROCm was seen as immature and buggy, a distant second to the polished and comprehensive CUDA. But AMD is investing heavily to close the gap. The latest version, ROCm 7.0, represents a significant leap forward, boasting up to a 3.5 times increase in inference performance over the previous version. This demonstrates a clear commitment and a rapidly accelerating pace of development. AMD's strategy is to leverage the collective power of the open-source community and its key partners to out-innovate Nvidia's massive but internal engineering team. It is a rebellion fought not with a single army, but with a decentralized alliance of developers all working towards a common goal, breaking the lock-in of a closed platform. This battle plan is not theoretical. It is already being executed, and the early results are promising. AMD has secured a series of crucial wins that validate its technology and strategy, forming the foundation of a powerful anti-Nvidia coalition. The most significant victories have come from the major cloud providers. Microsoft Azure and Oracle Cloud have both announced large-scale deployments of AMD's Instinct MI300 and MI350 series accelerators. Oracle's commitment is particularly noteworthy, with reports of a single massive AI cluster being built with over 27,000 MI355X GPUs. These are not small-scale experiments. They are multi-billion-dollar investments that signal a genuine shift in the market. Even more important are the deep partnerships being forged with the leaders of the AI revolution. Meta, the company behind the Llama family of open-source models, uses millions of AMD EPYC CPUs and is a key adopter of Instinct GPUs. Most critically, OpenAI, the creator of ChatGPT, provided direct feedback that heavily informed the very design of AMD's next-generation MI450 chip. These companies are not just customers, they are co-development partners. Their adoption validates AMD's hardware, and their engineering contributions are helping to rapidly mature the ROCm software ecosystem. The fight for the future of AI is not simply AMD versus Nvidia, it is an emerging coalition of everyone else versus Nvidia. The hyperscalers, the leading AI labs, and even the server manufacturers like Dell, HPE, and Supermicro all have a powerful vested interest in a competitive market to avoid being commoditized by Nvidia's increasingly vertical strategy. Nvidia's push to sell complete, integrated rack-scale systems like the NVL72 threatens to turn its partners into mere resellers and lock its customers into a single proprietary stack. AMD's strategy, in stark contrast, is explicitly open. It champions industry standards like Open Compute Platform-compliant racks and the new Ultra Accelerator Link Interconnect, which allow customers and partners to mix and match components from different vendors. This preserves their own value, flexibility, and control. Therefore, when Microsoft or OpenAI partners with AMD, they are doing more than just buying a chip. They are making a strategic investment in an alternative, open ecosystem that directly serves their long-term interests against Nvidia's closed one. AMD's success has become their success. A healthy dose of skepticism is warranted. AMD has fought a version of this battle before, in the consumer gaming GPU market, and has consistently struggled to capture significant, lasting market share from Nvidia. For years, despite often having competitive hardware, AMD's share of the discrete GPU market has frequently languished in the single digits. This history raises a critical question. If AMD couldn't win the fight for the hearts and minds of millions of individual gamers, what makes the data center AI market any different? The answer lies in the nature of the customer. The consumer market is diffuse, driven by brand loyalty, marketing, and the performance nuances of thousands of different games. The data center AI market, in contrast, is highly concentrated. A handful of hyperscale customers, Google, Amazon, Microsoft, Meta, Oracle, account for the vast majority of all sales. AMD does not need to convince millions of people. It needs to convince a few, very powerful and very pragmatic engineering organizations. Their motivations are not brand loyalty, but strategic risk mitigation, supply chain diversity, and total cost of ownership over a 5-year deployment. It is a fundamentally different sales process, and it is one where AMD's value proposition as a credible second source is far more potent. The greatest obstacle to AMD's ambitions remains the CUDA moat, and its depth should not be underestimated. While ROCm is improving at a rapid pace, it is still playing catch-up to a platform with an 18-year head start. Analysts and developers alike have pointed to ROCm's challenging out-of-the-box experience, which is often riddled with bugs and requires significant engineering effort to make work at scale. This stands in stark contrast to the mature, stable, and comprehensive nature of CUDA, which has become the gold standard for a reason. For many organizations, the perceived reliability and lower engineering overhead of CUDA still outweigh the potential hardware cost savings from AMD. Furthermore, Nvidia is not standing still. The company is on a relentless annual innovation cadence, constantly releasing new hardware and, more importantly, deepening the CUDA moat with new software features, performance optimizations, and specialized libraries. The target that AMD is aiming for is not stationary. It is accelerating away at a ferocious pace. Every new feature Nvidia adds to CUDA is another shovel of dirt, making the moat wider and deeper. It is essential to ground this narrative in financial reality. For all the strategic momentum and technological promise, AMD, remains a distant second. In its most recent reported quarter, Nvidia's data center revenue was $41.1 billion. In its own Q2 '25 report, AMD's data center revenue was $3.2 billion. The gap is not just a gap, it is a chasm. Success for AMD in the near term will not be measured by flipping these numbers. Even the most optimistic analyst projections do not see that happening. Instead, a realistic picture of a major victory for AMD would be capturing a meaningful and sustainable slice of the market. Projections suggest that if its strategy is successful, AMD could secure a 15% to 20% share of the data center AI GPU market by 2026. While this may seem modest, it would represent a monumental achievement. A 15% share of a market projected to be worth hundreds of billions of dollars would translate into tens of billions in annual revenue for AMD, transforming the company's financial profile. More importantly, it would signal the end of the monopoly. The goal is not conquest, it is competition. AMD's most significant challenge is not its technology or its strategy, but time itself. The AI revolution is driving a massive, once-in-a-generation capital expenditure cycle as companies around the world race to build out their AI infrastructure. The architectural decisions being made right now, which hardware to buy, which software stack to build on, will have consequences that last for a decade or more due to the immense cost and complexity of this infrastructure. Nvidia's CUDA is the mature, stable, low-risk choice for deployments happening today. AMD's ROC-M, paired with its advanced hardware, is the promising, open, and cost-effective choice for tomorrow. Every quarter that AMD's software is not perceived as good enough for seamless, large-scale deployment is another quarter where billions of dollars of infrastructure are irrevocably built on Nvidia's platform. This deepens the moat and makes it exponentially harder to displace that infrastructure later. AMD is in a high-stakes race to execute its software roadmap flawlessly and rapidly, to capitalize on this specific, fleeting moment in time.